Greece gets a $22 billion infusion for its four major banks as a surprising vote favors staying in the union. China says it will help drive growth through a stimulus program in order to avoid a sharp slowdown. The futures are up after a long holiday weekend. Can they hold? I'm Brittany and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany with The Street, and together we bring you the morning call. So welcome back, everybody, from the long holiday weekend. Futures are, of course, up this morning. We're seeing lots of positive headlines driving the market right now. The question remains now, will it hold or should we short?
Well, the question is also, are those really positive headlines? A lot of people are getting a little excited that the four major banks in Greece are getting a $22 billion cash infusion, which they think might be them turning the corner. And they're also thinking that perhaps the vote that was a little bit more skewed towards the side of them staying in the Eurozone might keep them there and not have like an orderly or disorderly default like a lot of people have been thinking, which I still think happens, in the short term.
So what do you make of the headlines that we're seeing, the Greek banks, and of course the news out of Spain as well?
I think some people are trying to line it up where, if you remember, years back when our government came in and bought our banks, you had Citigroup at $1, you had Bank of America at $2.50, you had JP Morgan below 20, and that was like a bottom for us. So they're going in and they're basically nationalizing the Greek banks. But I just don't think that it's going to stick. I don't want to put my opinions in there. We could remember what happened to Fannie and Freddie and some of the zombie banks now and how they never recovered and they're just sitting there burning cash, which I do think that could happen in Greece. So at this point, I wouldn't get too excited. I would watch the action. And again, I would look more towards Spain and Italy to see what's going on with their yields.
Well, let's take a look at the S&P because the S&P is actually currently down about 6% for the month. It did have a small bounce last week. What are the levels to watch here down?
Well, right now we're down about 6. I think at our lows we were down 9. So the question is, can we resolve this lower range to the upside or will it be to the downside? So today with the futures opening up around 9 handles, we're in right into that zone that failed 3-4 times last week. So can we take that out? So if you look at the chart of the S&P, you'll see a lot of times I feel like I have an edge. Today I don't really feel that way. If you look back at the topping action here, this was that head and shoulders pattern, and then we talked measured moves. So I was very adamant to say that we could go from this 1420 to the neckline here, all the way down to the measured move of about 1300, and we did go to 1291. Here we have this lower range where some dip buyers are coming in, but you haven't been able to buy higher yet. So the question is, can we get above this 1328 and get a 60-minute close above it? A lot of people ask me, what does that mean? It means for at least an hour, we trade above this level, not just open there and show some buying. If that's the case, you could see a continued bounce to this prior support, which would be resistance around 1343. And then, I don't think obviously it happens very soon. Sometimes you do actually retest the neckline here. So at this point, some guys who are trying to position long for an oversold bounce, they're looking at this level. But if we can't get through this level and we start to fall below 1310, then all of a sudden the 1291, 1295 comes into play, and then the 200 days. So right now, I'm going to just look at the action. I'm going to measure the landscape, and I'm not going to have opinions. So I'm only coming in long Apple today, not the market, because I'm not sure exactly if we could, continue the bounce or we fail. So I'm in the same position as most people out there are trading.
Well, speaking of measuring the landscape, let's check the temperature of some sectors. Let's start with tech. Hasn't been that strong. When we take a look at the Qs, where's the support right here?
Well, just like the market, the Qs have been wedging. They've been trying to figure out if it could hold here and go higher or pause here and go lower. So if you look at the chart of the Qs, you will see that you do have a defined tight pattern here where at least you have this mini downtrend, okay? I think we're opening right near the highs of it, right near 62.95, just like the S&P. So it's not showing leadership. It's just basically in line. So I would say if we can get a close above 62.95, you could see a short-term move that could happen today, up to about 63.44, and then you have a much, much bigger resistance all the way up here. So if we can get above this downtrend and close above it, you'll see some short squeezed, and then here are the two resistance areas that I would write down. If we start going negative and we start breaking, just say Friday's low. The low of Friday was 61.89. We could start resolving to the downside. So at this point, again, we have to watch the action very close and try not to have opinions.
All right. And retail, on the other hand, has been strong. How well do you expect it to continue to hold up?
Well, it was good to know that retail has been stronger during the correction because in this bounce, it's been the best. It's been the most potent. You've had great stocks that are holding their 100-day moving average. I think for traders, the relative strength has been in any stock that hold above their 100-day. They're the ones that have been acting well. And if you look here at the RTHs, you will see that it held its 100-day, it hovered right around there, and then had a nice bounce. But the question is, will it fail at this downtrend? Can you buy it higher? You were able to buy it into this big support for a bounce, and we've had now 1, 2, 3, 4, 5 up days. Well, the market really didn't, so that is showing you good times. Now, a lot of relative strength here. So the question is, can it get above this 41.54 and hold above it? To me, it's just really not that compelling. But I would say if it does, then you could stick with some of those stocks. And for a macro basis, if you're in those strong stocks, you could stay there because on a macro basis, they haven't been technically too damaged.
Well, speaking of bounces and good times, the XLF bounced from the 200-day moving average last week. So can that level hold going forward?
This has been like on the BC list, so it's not having as good a time as the retail group. So rightly so, with all the negative headlines coming out of JP Morgan, even more so saying now they're selling good positions in order to show that their big loss by the whale isn't whistling too loud or something like that. Anyway, you look at the XLF, you will see that it too has a lower pivot, not really showing any relative strength. It's actually trying to hold the 200-day, which is right here, so it's showing relative weakness. You do have a small pivot area that we could watch here, so I'll give you a closer look. Here is a close near the lows on Friday. You do have this mini range to trade against, so if you're uncommitted, just trade long versus this 1392. If it breaks this, some guys might cheat short, thinking that it's going to go down through these lows, and if we're going to be weak, this would be a group that does so. But if it could hold in there, again, just like everything else, if it starts trading above 1424 and could hold above it, there is some room to bounce up to this 1440, 1451 area. So not a lot to look forward to at this point. But there is trades if you're a professional trader looking for cash flow.
And what about in the home builders? Because they have been strong. People are wondering if those levels will hold.
This has been a great group, a group that everyone wants to hate because they've been so battered and bruised. But you have to trade it. I think last week we talked about a short call which yielded money, and then now we bounced right back there. So if you look at the chart of the home builders, you will see that it is one of the best groups still. And it just keeps proving this year that it is. It's not only above, it came through the 100-day and came back above. It's well above the 200-day where you saw the financials. It did hold this area. This was longer term support, so it was a better area to buy here. If you guys remember this, when it broke this tight little wedge type pattern, just showing you how you could time things, it was a good intermediate short, yielded money, and then once it held here, some guys played it for a bounce. So now it's coming right back into that resistance. So for me, I would say I wouldn't look to just be buying back here again. This is a stronger group. If you're in those names, stay with them longer term because it's still proven that you could hold them. But there's also some micro trades in there as well.
And we're seeing also Goldman upgrade some oil-related names. Now, could that possibly be the boost that sector, which has been weak, needs?
It might be for today, but I'm not taking their timing calls so seriously because they've had some poor ones this year. And if you're watching this from Goldman, I'm sorry, but you just had a few poor calls. I'm sure you had some good ones. I don't follow them all. But anyway, technically this group has been weaker. Technically, there's no momentum here, but I guess on a fundamental basis with a long-term approach, you could buy some here, but you have to know that they might go lower and you might have to add more. So if you look here at the XLE, you will see, it also, at this point, it's well off the highs. It's below all the moving averages, actually below the 200-day. So I don't like to buy groups below the 200-day. It shows you how it's weaker. But anyway, from a short-term basis for a trade, just like everything else, you have a lower pivot here. If it starts to get above and stay above this 66.42, you do have a gap that could be filled to 67.22. So for a trade, that's not so bad, and realistically it can happen. I'm sure some high beta names in this group, maybe like a Chevron or whatnot, could act better. And then on a longer term plan, I think, or a longer term basis, 68 is huge resistance. So here is your short term trade to fill the gap, and then longer term you have 68. And if Goldman's right, and this continues, and this would mean probably the market is getting up to 1350, 1360 in the S&P. There's a small chance this could hit 69, but I would say if you're long, I would be long gone right into the 68.
Okay, coming up, we're going to be diving into high beta tech names in the trenches. We're going to take a quick break, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and we're talking about high beta tech today, starting with, of course, the leader in the sector, Apple. On Friday, we did see shares of Apple retreat, but prior to that, we had seen shares rise in a few trading sessions on talk of the upcoming iPhone 5. So what are the key levels to know in Apple today?
This is a very important stock to watch / own. It's been acting best. It had a great move off the 100-day. This is actually one of the swing trades I'm trying to swing, because recently the only way you've been able to make any money long is for like a few minutes, few hours, and maybe a day and a half. So for this one, I've been trying to hold as a swing trade, trying to guide people in on a stock that acts well that you could stay with as long as it follows the rules. And right now, this will be a good proxy to see, can you buy something higher? Can it break a downtrend? And if so, maybe it gives a little bit of conviction to the market. So if you look here at the chart, you will see that right on this day is when we started getting involved again for a swing type trade when it broke above this 543. I think I was in it like 537. Okay, then you had your first move up. It maintained the upper top 20% of this bar, showing you commitment. Then it tried to break through. It pushed through, but it wasn't ready. If you look from where it came from to this resistance, major resistance, not so bad. And then it had a nice inside day Friday. So I would say if it can get above 565.85, that could make the market probably a little bit happier. But really, if it starts getting above 575 and it can close above 578, I think that would breed some confidence. But if Apple goes negative and starts breaking through Friday's low of 558, you're going to see some naysayers come out and just say that this downtrend is still in control. And my stop on this is going to be at 553, because if it breaks this 2-day range, then it could come back to this 100-day once again, and that means tech's getting weaker, market's getting weaker, and I'm a market timer, so I don't have to sit there and hold my nose and go underwater. I'll rebuy it with a better plan.
And Amazon in the headlines after news the company plans to sell prepaid wireless service in Japan. Now, I've seen a lot of investors out there talking about the lack of juice that Amazon has had since earnings and wondering if we'll see a possible move towards the 200-day.
It could, and it's starting to trade into the earnings gap, and we like to see pent-up momentum. And if you have an earnings gap that stays intact, that means there are shorts trapped, and it means that people want to pay up for it. And as it starts to go into that earnings gap, it loses some of that momentum. It gives the shorts actually a little bit more conviction. So if you look at the chart here, you will see that once it broke this range here, this was the range that was intact that we were all trying to trade against. This was what was this, 220 or 218 area. This was a very important day. A lot of guys actually made some money short when it engulfed this upper level support. Then you had that 2-day down move. It's been hovering below this, not being able to get back above it. So Friday it did close near the lows. So the question is, I think some traders are going to look to fade this up open, fade the strength on Amazon, and if it starts to show relative weakness, they will add if it starts breaking through this 212, 211. If that's the case, it could work its way down, and this will give us clues that we go lower. So right now, I don't think you can be stubborn too, because lots of time with Amazon, it's a trap. So in the first 30 to 60 minutes, they could gap it up, and if it doesn't fill that gap and the futures, hold there and it shows relative strength, shorts that are trapped from Friday will have to cover. So just make sure to watch the composure today with it. Like, it's just say the futures go up 5 more handles on the open and Amazon doesn't go up, then you have your sign to fade it and look for continuation to Friday's weakness and potentially to break that area of that 212 for follow through.
Now, let's mention Baidu, because some Chinese sites are reporting that iPhones sold in China will come with Baidu search support starting next month. That sounds like it could be huge for the stock, but is it not out of the woods yet? It seems like it might have some room to go down before it can come back up.
It just feels that the market's so tricky. People are having a hard time in U.S.-based names, and with Baidu and China and the slow growth talk, this stock's just been a sell ever since it broke this, ascending channel. If you want to look here, you'll see technically, when it broke this area, it's just really never looked back. This was your topping area where on this potent day was kind of like a red flag saying be careful here, and then when it couldn't reclaim that half of it, look what wound up happening. You had another exit area right around here when you have what you call a bear flag. Here's your pole, here's your flag, there's your continuation. So at this point, it is trying, it's desperately trying to hold above this recent area Okay, but you're not seeing any relative strength. You're not seeing any follow through. It's very, very choppy. I used to trade this all the time, and for some reason, for the first time, I've been avoiding it just because of how choppy it's been. So I would say, you know, if you long trade against this low here, this low is 115. But I guess if it starts getting above this little downtrend here, 122, you could see a bounce. But I'm just avoiding it. It's just, you know, there are a lot of things that are easier to trade, and this one just lately has been very difficult.
Well, Google broke below the 200-day moving average on Friday. So what are the levels of support here?
Well, Google's been, everyone says, oh, Red Dog, that's your stock of the year, and that was back in December, and obviously we trade in real time and things change. And in the last, I would say, 2 weeks, I've been saying, watch the 200-day. If we break below the 200-day, if you're uncommitted, you get out of the way, because if a stock breaks and closes below, that's a technical weak sign. There's no need you have to sit there unless you own it for like 3, 4, 5 years and you're just like, I want to just stay here, which I wouldn't as a technician. A lot of guys probably made money short at Friday. I wasn't here. We talked about that earlier in the week. If you broke below, you know, that 597. So at this point, it's interesting because with the futures up, it's going to be up a few dollars. So traders are going to try and sell this one early, and rightly so. If you look here at the chart, you will see, you know, this was when we talked about it being technically, when it was actually working out very well for us right here. This was like on the monthly chart, a breakout. You had a big move that got negated. Then missed earnings, held the 200-day at that point. Came all the way back. Another flub in earnings, held the 200-day. And then this, you know, again, tried to break out and then right back in, not a good sign. So here was Friday. We closed right around the 200-day, a little bit below. So I would say if this stock cannot get back above 593 to 595, there will be some shorts that smell blood and will probably add through this 588 for what could be an eventual move down to about 565. So today, there will be traders that try and look for relative weakness, just like Amazon, where the futures are up 9 handles, just say Google's up 4 or so, and the futures go another 4 or 5 handles. Google doesn't go. What does that show you? Relative weakness. Then you try and short versus that area, and then if it starts to fail, you have yourself a good cash flow trade.
All right, a couple of stocks really quickly. Las Vegas Sands looks like it may go a little lower. Would you pick some up, and at what levels, if so?
Well, this, just like the market, has been under a lot of pressure, technically weak for the past 3 to 4 weeks. It's trying to put in that lower pivot. Last week, I tried to use this as a vehicle for an oversold bounce. Hasn't been very fruitful, so to speak, or the dice haven't been falling the right way. Anyway, if you look here, another lower pivot. I guess I will probably try it again as it's wedging, okay? Wedging, we like nice tight patterns because at least you can see which way it's going to resolve. Here's where, you know, it broke this uptrend that was intact. We talked about using high-level stops around 56. So if you sold 56, this is a decent, you know, try area. You have the luxury here. Or for a trade, if you're flat, if it starts finally holding above this 49, you could see some type of bounce back to 50, 68, and if the market has any traction, at least 52. So that's what we're looking at as traders. But if all of a sudden it starts to fail, starts to resolve to the downside, you're going to see some more trouble ahead, and the next level underneath this is 42. So for me, it is something I will watch. I tried it a few times last week. It's been very, very choppy. Win. A lot of these things have just been pressured. So we'll see if we can get that bounce. If we can't, then we'll know what the market's doing.
Okay, and Caterpillar, weak bounce last week. So will this break down further?
This too, you know, a name you know, a lot of people have been trapped in this thinking, oh, it's Caterpillar, it has to go up. It doesn't have to go up. All names, doesn't matter what name it is, if it's technically weak, it can go lower. That's why you follow your rules. That's why we say if, you know, Google breaks the 200-day, don't just sit in there, because if you look at Caterpillar, you will see it did break the 200-day around 96 and went all the way as low as almost 87, so almost 9 points lower. So that's why, you know, you want to use that as a gauge. So at this point, it's not showing any relative strength. It's still above the recent pivot, so it's still somewhat in the game for a bounce. Here's this lower pivot that you could trade against. It was weak on Friday, so we'll see what happens here. I guess short term, use this higher level to trade against. Use this 89.63, but if it starts getting above this area, which was 93-ish, you could get a move back to here, but this pattern looks very similar. I almost feel like I'm showing you every stock, take away the name, and it's the same pattern. That's why you don't need to use so many different vehicles. Just see what type of pattern ignites and which way it goes, and, you know, trade only a few of them.
Now, what about a stock like Aetna? Because this group is looking a little bit better.
Aetna, we'll be going with Jill in options profit, so I wanted to take a look here. If you take a quick look at Aetna, you will see that, let's see what's going on here. It's coming off the lows. It's coming into resistance. It's probably a better option play than it is equity play, but at this point, it's trying to act a little bit better with the market. I would say you could, be long versus this area, and if it were to get above 42.16, it could continue a little bit more to the upside. For traders, I would say not so juicy. For investors, maybe, and for option players is probably a better plan.
Well, we touched on JP Morgan before, of course, all the news surrounding that stock right now. So what do you think are the key levels to know going into today?
I'm looking at this chart. It's the same chart as every other chart, which is good. So at least it's not a huge headwind. Okay, it has a lower pivot. Guys are trying to bottom feed. If you look here, here's your pivot low. Your pivot low on JP Morgan is 32.26. It's trying to hold higher. So short term, you could trade it versus 33.29. You take a closer look here. At this point, I am not in JP Morgan, but if it could finally start breaking above this little downtrend here and starts getting above 34.48, you'll see a little bit more energy in a bounce. You'll see a move maybe back to 36. But if it starts to fail and get below this recent pivot here of again, 33.29, and it heads back down to this 32.26, it's going to be hard for anything more than just a feeble bounce, which is what we saw last week in the markets.
And finally, with Facebook options coming out, what do you tell investors before they jump into the fray?
Well, at this point, you can't tell them much except for, lick your wounds and think about what you did wrong. If you put limit orders in and you were excited and you just said, I want to just buy it on the first day, obviously, you're not doing too well. If you've been trading it ever since, there's been small opportunity, not much. At least now there is a small little pivot area to trade against. So if you take a quick look here at Facebook, you will see that, last week, versus this 30.97, I actually charted also. This is obviously the move since the IPO. Pow. It's almost down 30% since. It tried to put a pivot low here at 30.94. That's what held on Friday, 31.11. If you were long this thing, be long versus 31-ish. But if it starts to break below this pivot, because you do have a bear flag right here, if it can't get above this lower end, because think about it, from 42 all the way down to here, if it can't find buyers in this area, that's how weak it's showing. And this is your bear flag. I know it needs more time to develop, but here's the pole. Here's the flag. The longer it stays down here, the more prone it is to break this. And I would think on a longer term basis that I would look to be a buyer here, for a long-term account from 28 down to 26. I know that's where they originally wanted to do this deal before all the, piggy investment bankers started to raise everything and needed to pay off the guys in the early rounds to give them high valuations. Whatever, we won't get into that. Short-term traders, trade versus 31. If it's one more time with the chart, if it starts breaking above this lower pivot, which it hasn't been able to do, start trading above 33, there is a move to retest this gap at 36. So at this point, be long versus, and I'll actually, you could short this thing now. If this thing starts trading below 30.94, I might short it for continuation. But otherwise, I'm probably going to avoid it because I would think lower prices or maybe small little momentum above that 33.
All right, so as we head into the first day of course, shortened trading week, where's your focus?
Well, basically, I think I'm in the same boat as most people. I took a lot of risk off going into Memorial Day weekend. I wasn't sure what was going to happen. I stayed with Apple because it's been best in breed. I think today I'm going to see if I could position into a few things if the gap could hold. But if the gap doesn't hold, I might look to get short. And if Apple breaks below those higher levels I showed you, I might get out of that. Because there's still a lot to prove in this market. I don't know if 9% was enough, but there's a lot of summer left. So if you're a stubborn short, be careful because June 17th is still weeks away. They could do a lot of finagling with this market with the headlines between now and then. Same way, if you're looking for a bottom, they don't typically happen in June or July. They happen a lot later. So, just know that we can go lower and 9% might not be enough. So do less. Cash is a position. You don't always have to be in something. Trade what you know, not what you hear about, and just take a very prudent approach.
All right. Happy trading, everyone. Have a great day.